Residential sales market report for February 2023. What a mixed bag. The start of 2023 paints a mixed picture of the housing market, a rosier start than in 2022 for some, a more hesitant one for others. Realism versus aspiration is set to be critical for sellers transactioning over the coming months. To a large extent, the housing market continues to let the dust settle on the understandably chaotic final quarter of 2022. The Bank of England indicates that December mortgage approvals at 35,600 were at their lowest level since the global financial crisis, down by nearly a third quarter on quarter. However, Rightmove reports the number of prospective buyers contacting agents at the start of the year was up 4% compared to the last normal market in 2019. The start of January was also the third busiest day on record for property valuations, considering a sign of future demand. By the end of January, the swap rate had pared back to 3.8%, its level of early September. Although the base rate of interest has just risen to 4%, it looks likely to stay below 4.5%. These factors, together with the latest forecast for the UK economy, mean that mortgage approvals are likely to settle somewhere above December's level. There are signs too that inflation, the rate at which prices grow, has peaked, and the latest independent forecasts for the UK economy released by HMR Treasury paint a tentatively more optimistic picture, with the economy now expected to contract in 2023 by less than 1%. The rate of house price growth continues to moderate. Nationwide report annual price growth in January fell to 1.1%, down from 2.8% in December. And all major indices indicate month-on-month marginal falls in prices. This is in contrast to new seller asking prices, which rose by 0.9% in January, the equivalent of £3,301, albeit they are over £8,000 lower than their peak in October, according to Rightmove. With the market of 2023 set to be dominated, at least in the short term, by needs-based as opposed to discretionary buyers, price sensitivity will be key to securing interest and offers, with the supply and demand pendulum likely to swing back in the favour of buyers. As many have commented, gains achieved in the market in recent times mean that for the majority of sellers, a reduction in asking price is likely to translate into a financial loss when compared to the purchase price. Rather, sellers need to ensure their aspirations align to current market conditions. Year-on-year price growth in the premium markets is currently outpacing the wider market. The 10.8% annual price growth continues to be fueled by high value activity in London and across the south. At 851,000, the prime market price thresholds have risen by over 125,000 compared to January 2021. Recently released data from the 2021 census indicates that there are close to 25 million households in England and Wales, of which 62% are in home ownership. This is down from 63% in 2011. Such properties are either owned outright or owned with a mortgage or a loan. Mortgage statuses have been recorded by the census since 1991, and Census 2021 marks the first time that the data has shown that a greater proportion of homeowners are now mortgage-free, at 53% up from 47% in 2011. Wales and the South West boast the highest proportion of mortgage-free homeowners of all regions of England and Wales, whilst only in London is the proportion lower than 50%. Over the last 12 months, the average pound per square foot is £691, with a total value of sales of £47.2 billion and 21,705 properties sold at £1 million and above. In the southeast, the average pound per square foot is £619 per square foot and an annual price increase of 11.2%. Follow me on my social at Fine & Country Alan. If you're thinking of selling, do give me a call on 07810 567 862, or why not drop me a line at alan.graham, Graham, at fineandandcountry.com. Thanks for watching. Have a great day.